Hello. It's my pleasure to introduce our first speaker today, a familiar face if you were watching on day one yesterday. But it's my pleasure to introduce Søren Morgensen, who was previously SVP and Head of Group Strategy and Transformation at Danske Bank. Before that, an advisor at McKinsey. But today is heading up the business management and growth team at Banking Circle. How are you, Søren?
Very good, very good. Thanks, Oliver. You're okay?
Very good, thank you. Looking forward to your presentation. Bounce Back Banking, what are the markers for success in delivering SME financial services? Søren, once you finish your presentation, I'll be back on screen to bring you some questions from the audience. But for now, the stage is yours.
All right, well, thank you very much. Hi, everyone, and thanks for listening in. I'm here today to talk about a detailed study that we've done into the attitudes of SME businesses. And we found actually a significant gap between what these SME businesses expect, what they need, and the quality of the advice and services that they today receive. The presentation will highlight the concrete areas where financial institutions can adopt new approaches to support small companies for profitable and sustainable future in the next normal after COVID-19. And to add a spoiler to the whole thing, or if nothing else, an executive summary, the point will really be that achieving total financial inclusion for SMEs will require a joined-up ecosystem where different parties work together on delivering that service to SMEs. Now, that's the introductory remarks, but let's jump in. First of all, let's just establish the case here. We're talking about 22 million SMEs in the EU. They clearly represent a significant opportunity. They account for 2/3 of the EU employment, 2/3, and they contribute to more than half of the business turnover, more than half. So this is not a small segment we're talking about. It's a major segment. And what's interesting is that actually banks say that SMEs are too expensive to serve, and this is because it's not one type of business. It's a wide range of business models, and there's no one size fits all to SME lending solutions. Banks don't have flexibility or resources that are necessary to offer sustainable solutions at affordable, profitable rates. Neither do we see any existence of corporate or retail focused offerings that are suitable for SMEs. So you can say SMEs are stuck in the middle between retail and corporate, a major segment of 22 million SMEs stuck between propositions. That's actually what we see. Now, as a result of that, we see that 40%, just about at least, SMEs use settlement accounts in other countries. A third use fintech money transfer services, and almost half of SMEs said that they've looked elsewhere for banking solutions that are better suiting their needs. So this is a remarkable observation and a remarkable situation that we're in. And this, of course, calls for new approaches to improve SME financial inclusion without significantly increasing the provider's cost to serve the segment, to make sure that SMEs are well served at a profitable way. Now, let's dive in and look a little bit on the pain points. First of all, 85% of SMEs find money transfers expensive. And we found that almost 1 in 4 experience customer service issues with their bank. We see poor quality and inconsistent service being raised as a key issue. Slow response times and poor FX rates raised as real issues, real problems. Moreover, we found that 65% of small firms have tried to access lines of credit last year. That's 2/3 trying to access a line of credit. And 20% of them as it says here, said that they were refused owing to a short credit history. And that's another thing to remember of SMEs. Many of these are new and they don't have a 20-year track record to show in the bank. And just to put that into contrast, just 1% of large enterprises are turned down for credit. So again, main pain point, money transfers are expensive, customer service issues are significant, and there's a limited access to funding. These are real issues that we're seeing. Now that turns into a wish list, and basically the wish list will fall out of that. The SMEs will want lower loan arrangement fees, reduced interest rates, more flexible repayment terms, and faster response times to loan applications. So this is not only about asking for reasonable prices that are manageable for an SME. This is also about getting a response, getting an individualized, tailored, empathic service. Now, if we look into the opportunities and partnerships, we should say that a new model is emerging. Banks are combining its existing customer relationships with low-cost, innovative fintech services. But fewer customers are now switching away from traditional banks. What we see is that established institutions are fighting back by offering multiple currencies accounts. And we see that fintech, as showed here, have reinvented themselves as platforms which banks can then access on a modular API basis. So in other words, we are seeing established institutions fighting back, trying to actually find profitable ways of serving these SMEs. Of course, the banks are well aware of this challenge and are trying to find solutions that are attractive also financially. Fintechs come into it with fresh eyes and are able to capture this as an opportunity to design specific solutions exactly to SMEs on the back of customer surveys and customer understandings, ethnography, and so on, to really empathize with the SMEs and their business needs. And that's exactly what we're seeing. The surveys made just like this one here, learning about real needs, translating that into attractive propositions. That's what we see fintechs are doing at the moment. And we just see strong opportunities for partnerships as a result of this. Banking tech was once pioneering, but is no longer keeping pace. Strong, heavy legacy systems on in-house servers, vast compliance agendas, real hard efforts to prioritize is just leading banks to deprioritize certain things and not being able to stay at the forefront of the digital agenda and the forefront of the customer serving agenda in general. Now, financial infrastructure providers are focused on developing technology to process payments directly, and we see those teaming up. We see that already at this point, 80% of retail banks and just short of 80% of commercial banks have already worked together. So I guess our observation is that even more in the future, we will see established banks who are forced to do strong prioritizations and deprioritizations will be setting up to cooperate with the new players who are with a very clear single mission, trying to serve SMEs in a good way. Now, we've done some efforts to try to boil down exactly what is it then we need to do better for SMEs. What is that model going to look like? The first point is going to be service. SMEs are happy with the digital delivery model, indeed so, but it must offer more bespoke services, lower cost, and improve responsiveness. This can be done digitally, but certainly also with a human touch. When it comes to pricing, we all want lower prices. That goes without saying. But the point really is also that that SMEs will want more flexible pricing, more transparent pricing, and faster responses on the pricing. There's a clear flag raised on credit lines and risk management. Banks should try to address the iniquity SMEs claim they face when seeking credit compared to big companies. They can achieve this through better risk scoring systems, APIs that are bouncing back or responding back very quickly, the assessments and the scores where the SME fall into. So that API-based credit line and risk management is certainly going to be important as well. Trust goes without saying, major element in banking has always been and will always be. And to win SME trust, banks should seek to combine the digital delivery with a personalized service and the human touch, as mentioned before. The new advice platforms are emerging in HR and in legal sectors, and this could rapidly evolve into banking and financial services, this advice platform. And we should expect to see different solutions trying to build trust by combining digital and human touch. Then finally, when it comes to advice, banks should consider offering paid for advice as part of their services. Starting from the digital platform and partnership models, providers can take things further, adding a layer of personalized service via email or voice into the mix. So advice is one of the difficult parts of SMEs. How do you set up a proper advice service to SMEs that is profitable? And this is where we see, for example, paid for advice as a potential solution, where the SME can actually get the service and banks can offer it in a meaningful, profitable way. That's another observation that came out of this. Now, to wrap it up, what's Banking Circle's interest in all this? Well, we consider ourselves financial infrastructure, able to deliver a better infrastructure for banks who serve SMEs. We can do that as we are ourselves a licensed bank out of the Luxembourg, our Luxembourg headquarters. We have local clearing and cross-border payment services to banks and by the way, to payment businesses in more than 24 currencies. We have real-time FX, and we integrate with payment businesses to offer flexible lending solutions to their merchants. So we can offer the infrastructure allowing for this enhanced service. In a nutshell, Banking Circle build solutions from the ground up that is tailored towards the customer. We are decoupled in terms of our architecture, and we allow that to be easily updated. So we're able to quickly respond to new customer demands, and that gives us a unique position to tailor solutions to banks who then in turn can offer better solutions to SMEs. Now, that was actually the gist of my presentation. We really wholeheartedly hope that you will stop by our booth and visit us at this conference so that we can continue the conversations about how to better serve this super important SME segment and making them more financially included in the future. Thank you very much.
Thank you, Soren. A really interesting presentation, and I think some of the challenges you touched on, we discussed yesterday, we're going to discuss today. These challenges aren't getting better. The environment's getting more difficult for SMEs at the moment, and many of our speakers are raising this problem. We've got some questions from the audience. First of all, Dan Fahini has asked, for most banks, SMEs still fall through the cracks between retail and commercial lending practices and behaviors. Is this due to legacy core infrastructure or traditional business models?
I think it's a combination of all of it. I know from having worked at a Nordic incumbent bank and advised many European banks, I know that these questions come up every time the service model is discussed. Mm-hmm. And I think there's multiple efforts coming in, multiple elements coming into it. I think, yes, there is a compliance agenda that is crowding out the opportunity to develop better service models. There's also this element that banks don't really know whether to position it as a corporate with all the services that are part of that, or actually as a retail customer. And from a profitability perspective, you would almost consider it a retail activity. But it just happens that a SME's needs are significantly different from a retail customer's needs, and hence they get lost. So I think this is also from an inability to actually define SMEs as a clear standalone segment that has its own needs and a call for a tailored service model that indeed is addressed by strong compliance, strong digital deliveries, and strong empathic human personalized services as well.
And one more question from the audience. Alice Spraggan has asked, can you call out any innovative fintechs who are already working to solve these issues? I guess some of your partners who are working on this?
No, absolutely. I think we spoke to TransferWise. We heard TransferWise speak yesterday, and we know that a lot of the international transactions are for example, solved by TransferWise. I think the conversation we had with Tide yesterday, with Starling Bank, are testimonies of individuals and organizations working very hard to actually address these pain points. We ourselves at Banking Circle, we don't serve customers directly. We do not have the interface towards the customer. We have financial infrastructure, but we would consider ourselves an element in this as well, because we take the effort to understand the problems. Then we go back and we develop infrastructure that allows banks to deliver this better. So I think we are seeing, including Banking Circle and many others, an emerging environment of organizations that have eyed this major business opportunity, and are going at it. Yes.
Fantastic. Soren, thank you so much for your presentation. Thank you for opening the day, I think, with some themes which no doubt we'll be discussing. Thank you very much. And to our audience, we'll be back in 2 minutes with our next session. We're going to be talking about alternative lending in 2020, and my colleague Daniel will be back to introduce that in just a few minutes.